Hello, you're welcome to today's class. Let's take a deep dive into Binance Crypto Loans tutorial. Today's topic will be looking into the introduction of crypto loans and why do crypto loans require collateral. And the main topic of today is, can users get crypto loan without collateral on the Binance platform? So what are the risks of crypto loans without collateral? And how Binance loans work? And also we'll look into miscellaneous information and more. For starters, users who do not have an account on Binance can click on the link in the description box below to have an account on Binance. All you need is to create an account, sign up with your email address or whichever details you want to sign up with, complete your KYC registrations, and you can now get started with accessing or benefiting from Binance. Users will also get sign-up bonuses up to $600 when you use our affiliate links. These bonuses can be spread across different features on the Binance platform. So you want to get started? The link should be in the description box. Click on the link and register an account on Binance to get started using the Binance crypto loans. Introducing the crypto loans. Crypto loans let you borrow crypto. So basically, crypto loans will let you to borrow crypto, and there are two different types of crypto loans available. We have the crypto loans without collateral and crypto loans with collateral. There are many reasons an investor may take out a crypto loan. Holding is a common strategy, but idle assets do little for crypto investors while they wait for the moon. Now, the fundamentals of crypto loans are very simple, similar to traditional loans. One key feature about or where they differ lies in how the funds are accounted for. With traditional loans, banks or institutions use credit scores to calculate the amount of risk they can invest into a borrower. So with traditional banks, even though you have some amount of collateral, some credit scores will still need to be put in place to make sure you are eligible for getting a crypto loan. With crypto loans, credit scores are totally unnecessary. So instead, traders can use their crypto assets as collateral for the lender to hold until the loan is paid back. Aside from this difference, the mechanism behind the loan are similar in a technical sense. So the crypto loan occurs only in the crypto space, while for traditional space, we have just basically loans. So crypto loans generally collect interest hourly instead of monthly. Also, the terms of loans can be shorter than traditional loans. With crypto loans, traders can borrow from 7 to 180 days on platforms such as Binance Loans. So the reason crypto loans operate on such shorter time scale is that cryptocurrencies are much more volatile than traditional currencies, so making them riskier for the lender and borrower. And should a cryptocurrency drop drastically in value, the collateral a lender took on could become worth much less than what was borrowed. So thus hourly rate and shorter borrowing terms are applied. Now looking at why crypto loans require collateral. Now in the field of borrowing or crypto-backed lending, collateral is the cryptocurrency asset that the borrower pledges as a guarantee that the loan is going to be repaid. And usually, the loan amount is less than the value of the pledged digital asset as collateral. It is to improve the chances of getting the loan-backed amount in case of cryptocurrency losses or defaults. Collateral is used as a security deposit. So unlike traditional loans, credit checks are not required to borrow crypto. Instead, collateral is used as a security by lenders to reduce the lending risk. In the event a borrower is unable to repay the debt, the collateral will be seized, and this model allows people with little to no credit history to borrow crypto. Collateral is used to calculate the lending risk. So collateral can also be used by crypto loan providers to calculate an individual's lending risk and terms of the loan, so including payment period, interest rate, and amount of lendable funds. The theory is simple. The higher the collateral, the lower the risks for lenders. This can be done calculating the loan to value ratio. The LTV, or the loan to value ratio, is the ratio of the value of an individual's loan to the value of the collateral. So with LTV, crypto loan providers like Binance Loans can assess individual lending risk levels, offering crypto loans while protecting their businesses. Looking at if an individual can get crypto loan without collateral on Binance. Now you want to know, in the crypto space in general, is it possible to borrow crypto without putting up your assets as collateral? Now, there are opportunities to borrow crypto loans without collateral in the crypto space in general. But there are some basic things you want to put in mind for you to understand how this works perfectly. Now, the chances of most of these scenarios are usually scams, which make people or take advantage of users who are looking for loans without collateral. At the moment, this space is still in its infancy, so primarily you'll find flash loans, which are also called loans without collateral, being offered by major DeFi protocols such as Aave, DYDX, Uniswap. These flash loans or flash swaps allow investors to momentarily loan tokens or coins, most often ERC20 tokens or stablecoins, to make a given transaction. Unsecured lending sprung up as a result of DeFi protocols advancing. There are many unsecured DeFi lending protocols, but they all work in a fairly similar way in that they use smart contract code to execute loan terms and conditions. Flash loans are both borrowed and returned within seconds in most instances, and it's all executed by smart contract that set the terms and conditions. If the borrower doesn't repay the capital or the conditions of the funds contract aren't met, the transaction is reversed and the funds returned to the lender. So yes, users can get access to crypto loans without collateral, although you want to keep in mind there are several key features or key tips to know. Looking at the risk of crypto loans without collateral. Like everything in crypto loans aren't without their risk. The unsteady price fluctuations of cryptocurrencies can lead to a margin call. This is where the borrower will need to put up more crypto in order to maintain their loan to value ratio, or else the loan will be liquidated. When it comes to uncollateralized flash loans, as they are mostly executed by smart contracts, you might think that the risks are minimal. After all, the code sets the terms and the conditions, and the transactions is simply reversed if they are not met. But flash loans are new, and so are the smart contracts running them. And this has allowed cyber criminals to exploit vulnerabilities in so-called flash loan attacks. Just this year, a flash loan was used to borrow huge sums on the PancakeSwap lending protocol to manipulate the price of the Pancake Bunny's native token Bunny in off-market lending pools, causing the price to crash by 95% and netting themselves around $3 million in the process. Falling prey to scams. Typically, collaterals are used to protect crypto lenders. So loans that sound too good to be true, like non-collateral loans, are likely not true. So users are cautioned against borrowing crypto from lenders that do not require collateral. Extremely high interest rates. It's unlikely that legitimate crypto lenders will offer non-collateralized loans as it leaves them vulnerable to losses if borrowers cannot repay their debt. However, there may be crypto lenders that do so in exchange for extremely high interest rates, smaller amounts of lendable funds, or shorter payback periods. Looking at how the Binance loans work, on Binance, anyone can borrow a loan so long as they are a registered user. Also, they are able to borrow various types of crypto such as BTC, ETH, BNB, USDT, and BUSD coins. So once the user has decided which asset they would like to borrow and how they will supply their collateral, they must then determine the length of the loan term within 7 days to about 180 days on the Binance platform. Depending on the amount of collateral, the platform will automatically determine the hourly interest rate to be applied. Interest rates are usually lower than traditional loan rate because of the collateral. Through Binance loans, users can borrow up to 65% of the value of the collateral, and loan funds can be used anywhere. Repaying the loan is simple enough. Borrowers that use Binance are required to manually repay the loan via the order page. So all you need to do is to click on the order page and you see your loan that is currently loaning. You can click on the repay button to repay your loan. It is important to know that interest is required to be repaid before the principal, such that the borrower doesn't need to repay the entire principal in one payment, in the case that the borrower can repay early and the entire amount of principal is paid back. The interest is then charged in accordance with the length in time hours borrowed of the loan. The users will not incur an early repayment fee. Miscellaneous, there are two main factors that you must consider when borrowing cryptocurrencies in general. The loan to value (LTV) ratio is a calculation that tells investors the actual value of the loan as compared to the value of their collateral. This is calculated using index price, which is not the same between coins. Thus, if any two coins were used as collateral of equal value, the LTV would differ between the collateral options. On Binance, users can get up to 65% of their collateral as loans. So when you deposit, let's say for an instance, you deposit about $1,000 worth of USDT or BUSDT, a user can borrow up to $650 worth of BUSDT or USDT stablecoin. You also want to look out for the individual requirements. The liquidation occurs when a borrower does not repay their loan, even if after they are given an extra amount of time from the original due date. If the principal cannot be met, the original collateral is liquidated to cover the loan. A liquidation fee is also incurred from the total borrowing amount set at 2% on Binance. So Binance will automatically notify traders or users who have a bad or a running loan that will look bad if the collateral they've deposited has currently lost value or is losing value. So let's say you used a volatile asset as collateral, in which case you use BTC or ETH as collateral, and these assets are currently losing value as compared to the asset you've collected. Binance will notify you to add to the value of your collateral, in which case, if you do not meet up with these basic needs, your assets will be liquidated, and also Binance will also charge you additional fees for liquidation. To access the crypto loans, there will be a link in the description box below that will take you directly to the Binance crypto loans page. As a new user, all you need to do is to click on the register button to get started. Old users can log in to get started. Now on the crypto loans page, it says you can borrow for spot margin futures trading or staking to earn RAPY. Now users can also repay at any time. Interest is calculated hourly. There are no transaction fees. A user who has borrowed a loan can also adjust a loan collateral on the Binance platform. You can adjust the loan if you use the volatile asset, which this volatile asset has increased in value, and you have the opportunity to pull out some amount of that collateral in order for you to use to do or carry out whichever purposes you want to carry out. And also users can also add to collateral. Now to borrow, all you need to do is to click on I want to borrow. On the I want to borrow column, users can now select the coin or the particular asset they want to borrow. Now once you've selected the particular asset you want to borrow, you can also select the collateral you want to use in borrowing this particular asset. On default, you should see the BUSD for the I want to borrow option, and the collateral amount should be for BNB option. You also get access to choose between this loan term for 7 days to 180 days. Then the initial LTV will be automatically calculated for you. Now it's currently capped at about hourly fees for about 0.001042% to about 0.0250% interest daily fee rate on crypto loans. So this is one of the cheapest transaction fees in the crypto space. So it's like you're borrowing and there are no basic transaction fees. All you need to do is just pay the interest that is associated with it. So unlike traditional loans where you get to pay additional processing fees as well as other fees that are associated with you procuring the facility you want to get from banks and other financial institutions. For unsecured loans, most unsecured loans usually come with high interest rates as well as transaction fees, and the time interval for users to pay could be a little bit skeptical. So a user who wants to use an uncollateralized loan should be mindful. Sometimes these scammers or these hackers could allow you to connect your wallet to a particular website, and in the end they might end up wiping away your other assets that you have in that particular wallet. Now click on the search button I want to borrow. User can search whichever assets. There are a variety of assets that are available for users to borrow on the Binance platform. Once you've checked and seen a particular asset you want to borrow, you can now go over to the collateral option where you can choose between staked or stakeable collaterals, and as well as collaterals that cannot be staked. So the staking collaterals offers you the opportunity to benefit or to get additional bonuses or staking interest when you're using this particular asset as collateral. So users can easily stake ADA token and also use them as collateral. So at the long term, you can see that the interest being generated from staking these collaterals could also help you nail off the transaction or the interest on your collateral or your interest on your crypto loans. So this is a good way for Binance to support users and to encourage users who want to use this asset or hold these particular tokens for a long period of time. Now the crypto loans can be used for lots of purposes. You can also withdraw these tokens and go over to the Binance P2P to use these borrowed assets to do with them whatever you want to do with them. The user who wants to hold their BTC for a long period of time before selling off can decide to go over to the Binance crypto loans page and borrow some amount of USDT or BUSD while staking or while using their BTC or their other token as collateral, and go over to the BUSD and borrow some amount of USDT. Thereafter, they can go over to the Binance P2P marketplace where they can also sell this particular asset in order for them to push through with their immediate needs. Users can also decide to want to hedge against the particular trend in the market. Let's say a particular token is currently bullish and users who do not have this token might want to stake a particular asset instead of them selling that asset that they already have. So the initial LTV ratio, here you get access to see your liquidation price and also the total interest amount that will be charged from your borrowing. On the number one, you can see all others. Users can check the all others. There's also a user manual on the crypto loans on Binance. So it is very transparent, and there's also a tutorial video to enlighten more users about it. Users can also get access to the more loan data available. Now you can decide to repay using your collateral, or you can decide to repay using the borrowed funds that you've borrowed. To whichever one you can decide to repay 100%, 25%, 50% or more. So Binance allows users to repay at any time. Users can also use their borrowed assets or their crypto loans to trade futures, just like you can see in this screen where a user has borrowed some amount of tokens and is currently trading futures. The user has made profit from transactions and he wants to now repay successfully the crypto loans which they've collected. So you can now click on repay successfully, and that's one key way to make profits in the crypto space. Now the benefits of Binance loans. The Binance loans is a lending solution that allows individuals to access crypto loans at competitive rates. Approved loans are secured with eligible crypto assets held as collateral from their Binance accounts. There are other benefits such as the wide range of assets offered, transparent user interface, loan staking feature, the early repayment, and all-in-one ecosystem. In conclusion, while it might be possible to find crypto loan providers that don't require collateral, the chances of encountering a scam are very high. So users will want to be mindful of these basic tips. So consider using trusted service providers like Binance Loans. And Binance is currently the #1 crypto exchange in the world. So it has more assurance or more security and more benefits. So users can easily use the Binance crypto loans, which has a very simple interface and beginner friendly, to borrow loans at competitive rates to avoid getting your identity or assets stolen. Thank you for watching. We do hope this tutorial has enlightened you about differences or giving you an insight for you to understand what uncollateralized loans are and collateralized loans, and also let you know that the possibilities and the eventualities of pushing through with either of these options. See you in our next upload. Thank you for watching, and don't forget to subscribe to our YouTube channel. Stay blessed.